I'm going to address the elephant in the room, Siddharth, and this has to be on the indirect tax front, which is GST rate rationalization to CBIC Chairman Mr. Agarwal. So in the past few interactions that we have had, and I was also where you were speaking to the industry Inc. people from CII and FICCI, all of them asking you for some relief on GST rate rationalization. Now, while I understand that the power is vested in the hands of the council and the committee, I want to understand what is CBIC's point of view on this. You've been vocal about it, that we need merger of slabs, we need simpler taxation.
Yeah, the terms of reference which have been given to GOM have multiple objectives. One is rate rationalization. Second, to see that the litigation which is arising out of multiple taxes on maybe similar types of items need to be addressed. Then revenues to be raised, duty inversion is to be corrected. So there are multiple objectives which have been given to GOM. GOM is going into the entire gamut of GST taxation, because when the rates were initially fixed in 2017, that was on revenue neutrality basis, and that time NRR was 15%. Over a period of time, items have been moved to lower rates, and now the average GST weighted average rate is only 11%. So, but revenues have to be raised, because earlier the compensation cess was there to compensate the states for or provide them 14% growth. But now the compensation cess which is being collected is to repay the loan which was taken due to pandemic. So now the thing is that once the revenues have to be raised, an exercise is to be conducted to maybe to bring down the number of slabs, or to put the goods in such a manner that certain goods will have to be moved to the lower rates. But if something is to be moved to the higher rate, there will be a lot of opposition. So the thing is that it's a complex exercise. My view is that the goods which are of similar nature should be placed at one rate so that we can avoid the litigation.
Sir, where will popcorn get placed?
So you have raised the same very correct point. The rate structure on food items is a bit complex. The food items are either exempted or 5% rate, 12% rate and 18% rate. There are 4 rates. So there is a need to rationalize the rate on food items. The issue related to popcorn will also get addressed if this rate rationalization exercise is conducted in a manner to avoid the litigation.
Sir,